A busy day on the markets today. Earlier I spoke to Martin Lakos from Macquarie Private Wealth. Well, Martin Lakos, Wall Street hit a new post-GFC high, so I suppose it's not surprising the All Ords popped through 5,000 today.
Yeah, Tiki, good evening. The Dow closed up 71 points at 12,200 odd points. That's now a June 2008 high. In fact, we've had up to last week 8 consecutive weeks of rallies. So it gives you an idea of the momentum in the stock market in the US. And for good reason. They've had a really solid reporting season. McDonald's reported better than expected growth in sales, and that also kicked along their own discretionary sales side. Consumer data is getting a bit more positive, and there does appear to be a higher level of job availability in the US. So, all the makings of the economy continuing to turn around. But it does appear that the Aussie market is lagging. If you just look straight across the indexes and not take into account, for example, the very large capital raisings that we had about over a year, 18 months ago, or the Aussie dollar impact, the Aussie market is only up about 50% from its lows in the GFC. The Dow is up nearly 100%. So we are lagging Wall Street at this point in time.
Well, just looking at the local market, obviously we're focusing on the reporting season. Now, how do you see it shaping up after such a benign confession season?
Yeah, well, look, we had a really long, hard look leading up to this reporting season, and we certainly tracked pretty closely the positive revisions versus the negative revisions ahead of the season. Interestingly, the industrial sector in Australia, we saw more negative revisions, almost on a basis of 2 to 1. The resource sector was pretty much even, and the mid-cap sector was pretty much in favour of upside or positive revisions, but only just. And leading into that confession season was pretty quiet, and as you mentioned, benign. There was 1 or 2 notable announcements, such as Downer, but also we had a couple of positive ones ahead of the season, with QBE announcing on that acquisition and JB Hi-Fi coming in with a pretty good guidance as well. Up until then, the reporting season so far has actually been pretty positive, particularly first half results seem to be better than expected.
Commonwealth Bank, of course, came in today with some heavyweight results. Did that move the market at all?
Yeah, look, they did come in with a pretty strong first half result. The stock did move. It was up nearly 2.5% at one stage, closed up 2%. Announced a very strong first half, better than expected. The big kicker was the dividend came in at $1.32 for the half. Expectations were between $1.26 and $1.30. And underlying all that was that we had good cost reductions and certainly improvement on the retail banking side for CommBank. So that got the whole bank sector ignited. In fact, the bank sector was up about 19 points, or contributed 19 points to today's rise, given that in fact we only closed up about 14 points. So the rest of the market was actually negative territory.
What do you make of the Oz Minerals result?
You look again, Oz Minerals very solid. If you back out a foreign exchange number that was there, it looks like the results are up $50 million, better than expected. But the real surprise by Oz Minerals was they've come in with some capital management for shareholders. So they're coming with a good capital return of 12 cents, a dividend of about 4 cents. That's total 7 for this year, and they're putting in a $200 million on-market share buyback, followed by a 10-for-1 consolidation. Now that sounds fairly complex. The bottom line is that Oz Minerals have been sitting on about $1 billion of cash and no gearing. They certainly are looking for acquisitions, and they've got the balance sheet to do so.
Martin Lakos, thank you so much for joining us again this year.
Thanks, Nikki. Always a pleasure.